We only half a minute left, Manisha. I'm really sorry, but you have to squeeze it in half a minute.
Well, Lada, I just want to say this much, that it is definitely a risk-on day today with everything from central bank, the China central bank, cutting its reserve requirement, also the Powell statements, the U.S. non-farm payroll data at around 312,000 versus 177,000 of an estimate. And then, of course, the U.S. and China trade conversation that begins in Beijing today and tomorrow. All of that has led to buying in crude oil prices, which is up 1%. You also have seen buying come back in metal prices. So steel, iron ore, copper, all of that has opened a percentage point on the higher in Asia right now.
Thank you very much for that quick finish, quick wrap, Manisha. I think that's what the markets are indicating in pre-opening, that even metals are going to be opening in the green. Okay, it is as good as the pre-opening promised, 0.8% higher on all the indices, I mean on Sensex and Nifty, and the mid-cap's not far behind, 0.7 higher. The Bank Nifty also is gearing up to a 0.8% kind of gain. Titan rules the roost first. I mean, it's leading the pack with a 3% gain, solid guidance. And then come the metal stocks. Vedanta is up 2.7, Tata Steel, Hindalco, all of them up over 2%. And the other 2%er is Yes Bank. That's the set of 2% stocks. And then come the 1.5%ers, Indiabulls Housing, JSW Steel, Maruti, Hero Motor, all of them up over 1%, I would say. And, well, there's gains even for ITC, although the fear is that there would be a cess to mitigate the Kerala disaster. A disaster cess was likely, but ITC not concerned with that just yet. Bajaj Finance, Axis, ICICI, all of them are in the 1% club. Is there anything in the red at all? I doubt there's anything in the red today. It's and all, okay. Bajaj Auto, if you please. Bajaj Auto had a roaring last week. It was the only stock which did well in its December numbers. And so today it's not participating, but it's flat actually, Bajaj Auto and BPCL. I guess BPCL, HP and the airline stocks will be either flat or mildly in the red today.
It's a very strong opening for the mid-cap index as well. Since you're talking about red, the lone stock in the red is Bharat Forge because of, the weak North America truck sales. Even Bandhan Bank actually, maybe that swap ratio has not gone down too well. Bandhan Bank is down about 2.5% at the moment. So those are the two stocks in the news in the red. Otherwise, most stocks are trading well in the green. Metal stocks are doing very well, as Manisha was also telling us. Vedanta, GSPL, Tata Steel, SAIL, JSW Steel, that whole lot is up about 2 to 3 odd %. You have PSU banks that are doing well. Union Bank, PNB, Syndicate Bank, all up. IDFC Bank up about 1 odd % or so. Despite crude moving higher, aviation stocks are doing well. So Jet Airways is up almost about 1 odd %. Ashok Leyland is picking up pace. It's up almost 0.7% or so. And some more stocks in the news. Shobha Developers, let's see, Sobha Limited that is. The sales were weak this time around, but the stock, okay, just about holding up almost about 1% or so. Good opening for the market, very strong, Anuj. After the move we saw on Friday, there's almost a 100-point follow-on buying.
Yeah, and I think the market will not slip before it forces those who perhaps took shots in last hour to cover. And that's the market's mood clearly. 80-point gap up, and that's sustaining. Whether you chase it or not, I think that's up to you. But, the Bank Nifty is also doing quite well. Mid-cap index has started straight away about, the advanced line at 4-5:1. Sometimes that's not sustainable. So that's, an issue. Tata Motors, we, discussed it on Friday. Perhaps just as a tactical play, that's working out because after a long time, you got some positive sales data. The ADR was up quite a bit. That's opening about 2% higher. But really, the sector of the moment clearly is metals. Led by Vedanta, which is clearly the top gainer. I mean, Titan is, but Vedanta, GSPL, JSW Steel, Tata Steel, all these stocks gaining ground right now. Ashwini, is there a trade here for you, or would you want to wait for any kind of dip?
The trade is clearly on metals, and that's where you buy right now, and that should keep you safe. The rest of the sectors have moved up, so I wouldn't be surprised if you get below 10,800 as well. But don't go for financials. I think the metals will hold up much better.
Okay. Sudarshan, what about you? As of now, it looks like metals are ruling the roost. Even a couple of these banking names, Yes Bank, etc., are moving up higher. Anything specific that you've noticed post-opening?
Yes. First, I maintain my long positions in Nifty and Bank Nifty. This is a positional trade. It will take a few days to reach its targets, which I hope it will. ICICI Bank and State Bank are both buying opportunities for the day.
Okay. Mitesh, anything on your radar and your market call now?
Yeah, I think Titan has managed to get past this 940, 945 zone. So I think keeping a stop below 940, this could be an interesting trade. I think 990, 995 could happen here. And Godrej Industries on an individual basis looks a good chart. On the Nifty, I think per se, my sense is that the Bank Nifty chart looks better. Nifty, overall, as I said, I think, we do expect with some choppiness, the Nifty to head towards the upper end of the range, close to about 10,930, 950. Possibly towards Thursday or Friday. So in that sense, I think I would want to take some, wait for some dips to buy into. 10,785, 790 is my buying zone. 10,760 will be my stop loss.
Okay, actually at the moment it looks like many people are taking profit, as Ashwini also said, maybe 50% profit. People could be taking if they are keeping their longs from Friday. You're at least seeing it definitely in the mid-cap space, some bit of profit booking coming in. Ashwini, Sudarshan and Mitesh, thank you very much for joining us through pre-market and the early opening rates. Udayan, now as the market settles at around the 0.8% gain, I wanted to ask you about what you can expect by way of rates and yields. The Reserve Bank has a clean run when it comes to inflation numbers. Food and fuel are obliging, but the fisc is not. I mean, GST collections have consistently, surprised on the downside by a good 10,000 crores per month. So you'll be staring at a trillion, 1 lakh crore in terms of a shortfall over there. And if you take away the state's share, the central share of shortfall is not a small one. And then now we are hearing about a large package for farmers. Can a central bank cut rates when you're staring at this kind of a fisc? So how would you look at yields?
I think the best of the fall in the yields is behind us, Lata, because of all the reasons that you mentioned. And I think given the way the politics is turning out, it would be very surprising if the government does not do what the market rumor is, which is some kind of a direct benefit transfer or a cash transfer to farmers. So some package will come. It has to come. It may come maybe in the union budget, and then the bond market will have to factor that in, and therefore the Reserve Bank as well. If that was not the case, I think in the February meeting, the Reserve Bank had a very good chance of cutting the rate by 25 basis points, given the inflation trajectory right now. But the bond market and any moves or announcements from the government will probably stay its hand. So it's best to probably expect nothing from the Reserve Bank of India for now, but to keep an eye on the bond deal, because one of the reasons why the market is now closer to 11,000 than 10,000 is the fairly significant cool-off we saw in the bond market. But I think the best of that is probably behind us as we wait towards the election season, and the market gets convinced that we are going to see a slippage, if not a fairly dramatic one, precipitated by a major move, cash transfer kind of a move from the government. So watch the bond deals, and therefore be a little leery of wading into a lot of NBFC kind of stocks which depend on wholesale funding.
All right, Udayan, we leave it at that. Thanks so much for joining us, and once again, Happy New Year to you. Have a great 2019.
I suspected you were going to talk a lot about Manchester United. I didn't hear you ask anything, Anuj.
I think cricket was on top of his mind.
Cricket was on top of mind, but yes, I think it's this year is for those who have followed football in late 90s and early 2000s, the two great clubs, Manchester United and Arsenal, I think they have given way to Liverpool and Manchester City. I think a lot of people are discussing that's the new great rivalry, and of course then it would pain both of us, right, to see it's two-horse race and neither of United or Arsenal in it, just between City and Liverpool, and they are both playing fantastic football right now.
They are, and times change, new teams come on, but we have to support our old friends, right?
Exactly. That's what you wrote in your book as well, Udayan, right? We have to support our teams, whether they are first or they are outside the top four. Thanks a lot, Udayan, for joining us, and of course we'll keep talking to you through the year. For now, the market's still holding on to gains, 300 points higher on the Sensex, 90 points higher on the Nifty. The market right now in no mood to give exit to the shorts of Friday. But we have Rahul Singh now joining us, CIO Equities of Tata Mutual Fund. Rahul, hi, good morning. First of all, Happy New Year to you and your team. Good morning. Your thoughts on how this year should be approached. 2017 was a great year for equities. 2018 also a good year if you manage to respect the risk reward and have a lower expectation. But thoughts on 2019?
Well, Happy New Year to you, everyone. I think for 2019, it's pointless to give a full year outlook because we've seen in 2018 how the year panned out and the narrative changes every quarter. Just last quarter, we were talking about weak rupee and strong dollar and Fed rate continuing to hike, and now the narrative has changed globally. Even in India, the narrative keeps changing quarter. So I think it's pointless to look at a year 2019 in totality and give a view on that. It could be a tale of two halves. It could be a tale of 4 quarters, for all you know. So I think the opportunity in this kind of a market for us is to actually generate alpha, which was so difficult last year. And I think stock picking becomes important, themes become important, and there are a few themes which we like corporate banks, capex, which we are focusing on instead of looking at 2019 in totality, because as I said, the narrative and the macro keeps shifting, and the ground keeps shifting very, very rapidly.
Okay. Good morning, Rahul. Good to have you with us. Have a great 2019. Good wishes from everyone here at CNBC TV 18 to you and your team. In the earnings season, what would you bet even before the season begins? Where would the disturbances come, and where will you see the tide rise?
Well, I think the disturbances are pretty clear where the slowdown has been to some extent in autos. I think commodities have not been great last quarter. So it's all pretty known. I think the banks, I think generally banks, corporate banks and retail banks, you would see the tide rising. Because one, we had all known about the slippages and the credit costs coming down. That part of story was beginning to unfold anyway last quarter. I think what has changed incrementally is that the liquidity squeeze which the NBFCs have faced and the pricing power which has returned to banks, even smaller banks, I think that part of the equation will also be visible this quarter. So all in all, that is one clear place where the tide seems to be rising. So if I were to pick, the clear winners and losers, these would be those. Apart from that, I think it will be a mixed bag, like it is always in India and in a market as diverse as ours. I think IT services would do fine. Pharma is always a mixed bag. So it's very difficult to then pick out a trend in the sectors apart from the ones I mentioned.
What about metals, Rahul? How are you approaching that space? I mean, this morning, at least a lot of the metal stocks are doing pretty well. But how do you think 2019 could shape up? And from a sectoral allocation point of view, would you put any money to work here?
Well, I think on the metals, the outlook has been challenging because the biggest consumer of them all, China, has been slowing down, and now we are talking about a slowdown, if not a recession in US. So therefore the macro remains challenging, but I think what we need to watch out for in metals, and that is something which we are constantly on the lookout for, is what kind of fiscal or monetary stimulus will China come up with. And I think there is already a lot of talk around that, especially on the fiscal side. So that remains critical for a short-term kind of a trading opportunity or a tactical opportunity in metals. But on the whole, if you look at and consider the fact that global growth is slowing down, there is a scope for a sustained kind of a momentum in the sector remains limited. And it also remains to see how the trade war talks pan out, because some of the slowdown in China was to do with the curtailment of the shadow banking system there. But the last leg of the slowdown has been more led with the talks around trade war and the impact which it has been having. So I think we need to watch multiple factors here, unfortunately, but there could be a tactical opportunity.
Sure. Rahul, one sector where there's been absolutely no slowdown, or even if there was, been bought is consumption names. Stocks like Colgate, Nestle before the Maggie fiasco. They've really been a bit of a dream. HUL as well gave you one correction perhaps, but then moved on. Your thoughts here, because valuations would always remain expensive here.
Oh yes, valuations have remained expensive and at a multi-year highs. So that is almost a given now. I think in consumer sector, the approach which one should have is to again identify companies where we are nearing the end of the upgrade cycle versus companies where we are at the beginning of the upgrade cycle. So that's issue number one. In a lot of companies, some of the companies which you mentioned, we are probably at the end of the earning upgrade cycle, and therefore any kind of leg up in valuations led by further earning surprises seems to be getting more and more limited as we go past quarters, and probably this quarter would be probably take us one step closer to calling that kind of a peak in earning upgrade cycle, if you will, in terms of the companies. So therefore, but there are still companies which are at the beginning of the upgrade cycle where the valuations are a little bit more moderate. So while maintaining the kind of stance when one has on consumer sector, one can always be more opportunistic in terms of trying to identify those kind of companies and shift portfolios there.
Okay, well, Rahul, clearly everyone has to take a call on IT. That's the one that will inaugurate the earnings season. What would your stand be over there?
I think the fiscal 20 looks very, very visible and solid in terms of earnings. I think from a sector point of view, however, that is not enough. What we have seen is a good wave of deal wins in fiscal 19, which will result in good earnings in fiscal 20 continuing. So depending on the company, you are looking at a high single digit to mid-teens kind of dollar revenue growth, which is pretty robust. But I think looking beyond fiscal 20, the scenario seems to be getting clouded by the fact that if there is a kind of a gradual slowdown in US and the corporate spending there comes down on IT, then the outlook for fiscal 20 deal wins and hence fiscal 21 earnings seems to be coming under a little bit of a cloud. So that is really the fundamental earnings outlook. But the good part about IT, unlike say pharma, is that the valuations are now again reasonable after 3-4 months of correction. So I would say on the balance, it would be a neutral kind of a stance for IT services at these valuations, considering the fact that the near-term earnings cycle is very strong, but the medium term is getting clouded. But that is getting balanced by moderate valuation. So I think it's a neutral kind of a sector right now.
Okay, more generally, Rahul, what are you penciling in by way of earnings growth in both FY19 and FY20? And do you think valuations could get a downtick, or do they remain like we saw them in FY18?
I think from an earnings growth point of view, this year you'll probably end up with low double-digit kind of an earnings growth rate. And next year, the earnings growth rate is obviously going to be much better in the 20% ballpark, because we have seen some sectors coming out from losses to profits, which will pull up these earning growth rates. So it's a bit optical, the 20% kind of earnings growth, because the core earnings growth is not going to be any different at around 15%. But the optics next year in terms of the market earnings growth would look much better, mainly because of corporate banks.
Okay, so you.
So in terms of valuation, what it does is that it provides some kind of a fundamental support to the kind of valuations which we are trading at. Our base case would be that if we are trading today at 18.5 times, and even if you take a 10% cut in the valuations because of the various macro and domestic issues and risk factors, and if you get a 20% earnings growth rate, we are still looking at a healthy market return in high single digits to low double digit kind of market return for the full year. But as I said, giving a full year outlook is fraught with risks because the narrative keeps changing every quarter, every 6 months. So it could be a tale of 2 halves or 4 quarters.
So you did mention corporate banks, I mean, a couple of times. What about NBFCs? Is this a good time to be buying NBFCs? Some of them have already run up about 20-25% from their lows. But your stance on that?
I think the corporate banked NBFCs and NBFCs who have a good lineage and track record are beginning to see the same situation in funding which we had seen before September. So I don't see too much of a change in their outlook in terms of funding, but there are pockets which are under stress. So we are looking at it cautiously and allowing ourselves the liberty to increase weights where we see more of the former and less of the latter in terms of the risk profile. And I think, you know, NBFCs have a role to play in the economy, and I think what we are seeing is probably next 6 to 12 months of growth recalibration in a lot of these NBFCs. So if they were growing at 35-40%, they will have to be happy with 15%, 20%. In some cases, the valuation recalibration has happened. In some cases, the valuation has not corrected enough to account for the risks which are still there. So, so it's frankly become, and good for us, that it's frankly become a more stock-specific call rather than a sector-wide tide which we are looking at right now.
All right, Rahul, thanks a lot for joining us today. It was a good conversation. The market slipped off a bit, just a bit, so just keep an eye. The Nifty was open 90 points higher, now about 68 points higher, still in the green, but perhaps some profit taking after the last 1.5 day move of about 150.
Striking distance of 10,800, so not a very big loss. Let's see whether even this dip gets bought, going by the global environment that's so charged in favor of the bulls.